Hey, let's just talk through the 80-20 of what should entrepreneurs focus on and when do they really need a lawyer to come in the picture.
We had no clue what any of these startups did.
If you don't fundamentally understand what you're building and why you're building it and how you're going to sell it, you could bring in all the consultants and maybe
Nobody knows what a value proposition is. No one knows how to actually explain.
What do B2B companies get wrong so often that over 350 companies have now. But I feel like fundamentally, that's not what entrepreneurship is. And like, there's cheat codes, but no one's going to come do it for you. Hey guys, welcome back to Funds and Founders. Today we have on the co-founder and CEO of FletchPM. Welcome to the show, Rob.
Thanks for having me. Excited to be here.
I have this joke where I say that retention on YouTube is 4 to 5 minutes. So I have everyone plug what they're doing in the beginning. I'll plug you at the end again. But just tell folks real quick, what are you working on? What's the best way to reach out? And how should they reach out?
Yep.
And then we'll get into it.
We work on one thing. Our company only does one thing, and that's helping B2B startups with their positioning and messaging. And so we have a very structured process that we take them through. It's effectively 3 workshops to sort all that out and then translate it into super clear homepage copy.
Nice.
And to date, we've worked with coming up on 350 B2B startups doing that.
Pretty cool. And what's the best way for folks to reach out and get in touch with you?
LinkedIn's the way. So very active on LinkedIn, posting daily, super active in the comments and DMs. So folks that want to reach me, shoot me DM, join the conversation on a post. We're showing up there. We haven't automated anything yet, so it's still us. That may change in the coming years, but we get so much out of the direct interaction.
Nice. I was talking to someone the other day who was using like a social media post scheduler, and he has this thesis that those work, but he feels like he has this gut feeling that pressing schedule and like pressing post yourself does more for the post than like an automated scheduler. Again, there's no data to back this, but
I buy it anecdotally a bit. Like we've always, like our thesis on posting on LinkedIn is that we're going to post only new things. And literally for the past 2 years, everything's new. We haven't done any repurposing. That's starting to shift a little bit, but the scheduler just keeps you too far removed from it all.
Yeah.
And so, I'm here for that thesis. I think there's there's logic to it.
I like kicking off every conversation with when and where did your entrepreneurial journey start?
Yeah, great question. I've always known I wanted to build a business. I would say going back to undergrad, started to tinker with like media business in like the sports area. No clue what I was doing, totally flopping. Effectively a blog plus is how I would describe it. And my background then, I was actually in biomedical engineering of all things. And I got really curious about the intersection of new products and commercialization.
Okay.
And so that sent me down a 15-year journey of going to a program that focused on that. And I bumped into some mentors that really helped me scratch that itch. And that brought me into sales and brought me into marketing and eventually product marketing. And so I always knew I was going to build a business. Where I got totally stuck is truly at the beginning. What's it going to be? Do I need a perfect idea? I had the terrible point of view on like how to even think about that until probably the last like 5 to 7 years, where my focus went holistically on startups and 0 to 1, which I know we have a lot of similarities there. And so getting more and more exposure in that gave me more point of views, spiky point of views on what would work, what wouldn't work, and ultimately just taking a bet and running with one is how I showed up today.
When did FletchPM start? And is there some thesis behind the name? What does the name signify?
Yeah. So the backstory of how it started, I met my co-founder, Anthony Pieri. We were a part of a digital product studio, effectively helping early stage startups go from 0 to 1, launch a product, get it into market. And whenever we were not on projects, because we were really fractional product leaders at that point, we were then trying to figure out, well, how do we sell more deals? How do we sell strategy for ourselves? And our target market is these startups or aspiring startups. And so we started looking at thousands of early stage startups. We tinkered with different tactics to reach them, outbound email. We tried to go vertical for a while. We poked around on social, and that's really what got us into LinkedIn. And as we did that, we started to notice 2 interesting things. One, we had no clue what any of these startups did. We were reading these homepages and we're like, we have no idea. This is like, is everyone talking like this? Or is this like a thing that nobody sees where they're talking in abstractions and revolutionize this, but like you couldn't actually figure it out? We're like, okay, that's interesting. And so we started posting about it. And as we were posting about it, we were then we noticed that like nobody knows what a value proposition is. No one knows how to actually explain it. And so that was the start. We saw this like gap of no one knows how to explain their product. No one knows the mechanics of how to even go about explaining a product. And that began really like a discovery journey of us, which we did all through LinkedIn, just sharing openly of like, look at this company. Can you even tell what they do? Here's my view. And we started to structure like hard theses on that. Until eventually founders raised their hand and they're like, hey, can you help? And, we didn't have a product. We're like, yeah, sure. And, we'll get into that story, I'm sure. But that's how it started. The name, as we progressed, the credit goes to my co-founder, one of his best friends, who's a designer, we told him a little bit about our business, which effectively is helping these startups with a sharper message, like hitting their target. And we derived it from the word fletch, which literally means to put feathers on an arrow. Okay. To make it fly straighter and farther. And so it's a very like conceptual play. In the beginning, it's funny looking back, I kind of hated it. I was like, man, people are gonna think Chevy Chase and like that 1980s movie, like the comedy that's out there. And we still get a little bit of that. But over time, it's really, really grown on me, and it's catching on a little bit with folks that know us. Yeah.
So real quick, what is value prop? How do you define value proposition?
Yeah. Well, let me back up. I'm going to define positioning first, and then we'll tie into value proposition because it's evolved for us over time. Positioning for us, we've broken down into core mechanics of really just answering 4 key questions. What is the product? Who is it for? What is the alternative to the product? And why is it better than that alternative? And built into the what is the product is also like, what does it do? And so those 4 questions, it's really simple. Yeah. When we think about crafting a value proposition, one of the big insights we've had is nobody knows the difference between a feature or a benefit. And we spent a lot of time spinning our wheels in that area. And so our argument of a value prop has 3 components when you're speaking from the product element. It has a feature, which is the technical thing. You can imagine that's like the thing they see. The capability is what someone does with that feature, the actual action. And the benefit is the outcome of what happens when you actually carry out that capability. That's the product side of a value proposition. On the other side, there's a market situation aspect, which is what are they trying to do? And that's what we call a use case. Like, what is the scenario contextually? Are they trying to do SMS marketing? And then there's a competitive alternative, which we call like almost like the context of how they're doing it today. And there's a problem with that. And so when you connect both of those sides, I am trying to do SMS marketing, I'm using the X tool, whatever it is, and I'm running into Y problem, you can then land your product message of, well, you should use our feature that has this capability, this new way of carrying out that activity to reach this outcome.
Got it.
And so we plugged all these, like, we started from more of like an atomic design approach, and we've structured this and used it to basically build our process up from the ground for how we actually get to these arguments.
Nice. I like that. So before we get into sort of your journey starting this, running a consultancy, a company, design studio, since we're down this path of like value proposition prop, what do B2B companies get wrong so often that, over 350 companies have now come to you to sort of figure this out? What do you think they're getting wrong and like not focusing on? And then at what stage is it the right time for them to come to someone like you? Because what I want to identify for someone listening is like focus on a product and getting traction, and then you go move into these steps of like positioning and value prop. If you overanalyze and over index on figuring out all of this, but you really haven't figured out like what is actually working, you're sort of like, pushing the real problem down the road. So like, let's talk about that a little bit of like.
Love this question. There's a lot here.
Yeah.
The biggest thing, probably like the creator of all the sub problems that we'll probably get into, is not knowing who they're going after. And more specifically, going after too many markets and too many audiences at the same time. It is the creator of all issues of how they explain their product, for how they position their product, for the campaigns they run and the channels that they show up in. And every startup, there's this interesting tension, especially for venture-backed folks. There's this vision of being this big platform. The visions usually involve a big TAM that often solves a bunch of different use cases for a bunch of different people. It's why they're investable. It's super exciting. Good product marketing is actually the exact opposite of that. And if any folks are familiar with Crossing the Chasm and Jeffrey Moore, what happens is mechanically when you start is these visions that have like usually are driven by new technology. They're bought into by VCs. They're bought into by visionary CEOs and technology enthusiasts. And that's where you see the early traction. And because they're curious, people are like, oh, this technology is interesting. I see this big strategic advantage. And these founders convince themselves that, oh my gosh, like I have early traction. All I have to, and my VC just gave me $10 million. This is all I have to do is keep sharing my vision. This is going to be a hell of a ride on this rocket ship. The reality is most markets don't give a shit about the vision.
Yeah.
And so there's this false hope that happens where they think they can just keep sharing it, but the rest of the market is actually really risk averse and they're very pragmatic. And so that creates an issue, because then how do you market your product? And there are these then segments truly based on risk profiles for how you go about doing things. And where it shows up, at least in our work, is people broaden everything. They try and share the vision. They try and talk to multiple audiences at once. And what they don't realize is when they do that, they're competing with almost everything. And when you compete with everything, you just can't win. You're not going to cut through all of the noise. And so that's the thing is, I guess there's two, if I'm being specific, there's this chasm that occurs from vision to pragmatic market. And then there's this unwillingness to get specific, which results in people just going too broad.
Makes sense. So quickly diving in on the being specific, how niche should someone get? Like, because you mentioned a couple things, right? You mentioned markets, there's industries, there's audience within certain markets. How do you think about this, and what's the 80-20 for someone listening on what's a good starting point? Because when you talk about B2B, your landscape is so vast, right? So just what are your thoughts on there? And then for someone listening, what's a really good way to start thinking about this and breaking it down to sort of narrow down to, like, hey, here's who I think I should serve?
It's such a good question. Okay, the conceptual answer is you don't really know. You'll never know. It's what's hard about entrepreneurship. The way we approach it, of like how specific should I get? Because this question comes up all the time when we're working with founders. We view specificity as a function of where you're at progress-wise. Meaning, and I'll tie this into positioning, position for where you are, not where you want to be. So going back to that, oh yeah, there's $1 billion TAM over here. That's great. How many customers do you have? 0, 10 free ones. Okay, well then guess what? We're now positioning for 10 customers or 20 customers. What's the next growth step? And when you reframe it that way, things get a lot easier, because it's not how do I position to make even $1 million? It's like, I'm trying to make 10K this year.
Yeah.
Great. What does that positioning look like? And and we try and stay out of the go-to-market mechanics and strategy that happens later, but we do also look at then resources as well. Current progress, and then what can you do? And it's really funny when we talk to these founders, even the venture-backed ones, because we go, they lay it out and we say, oh, look, there's all of these sub-markets you could play in. There's all these things you could do. And they're like, yeah, we want to go after them all. And when we're trying to coach them down, we say, oh, great. How big's your marketing team? And they're like, well, I'm doing it half time, or like I hired an agency to write copy on a blog, or like we're going to just about hire someone. I'm like, okay, let's think about this. What are you doing 2 days a week and your one person going to do on Monday when they show up? Do you really think you can reach all these places and show up? And what people have to realize from a marketing perspective, it's about consistency. It's not just, it's one thing to have the idea and have good marketing. The majority of the work, the other 99%, is just showing up every day and saying it to the point where it's boring. And that's misunderstood by founders. And so when we're trying to frame it, we kind of just put a spotlight of like, you think you're minted because you got a VC backing. You're actually screwed because it's freaking hard and you're a small team to get them to think more pragmatically.
Makes sense.
And so conceptually what that means is we try and turn a lot of these venture-backed startups in the early phases, especially when they're trying to find fit, more into bootstrap companies and the way they think about how to actually approach a market and sell what they're doing.
I think a quick thought when you're talking about marketing, I think a lot of founders, I'm generalizing a lot. I think founders are either more product-oriented people or tech-oriented people in like most cases. So if you're not a marketer by trade or a salesperson by trade, you assume a lot of things. And I feel like when you get down to what does marketing mean, a lot of marketing is getting your brand, like building your brand equity, being top of mind, so that when someone does need a solution to that problem, they're aware of your solution and aware of your product and aware of your company and like what you're doing as a brand. But I think when you're like a product or tech founder, at least for me personally, there's this notion of, oh, I put in X, I have to see Y. But like you're putting in X to maybe see Y over a 5-year horizon, right? Like back to like what market. So I think to that point, if it's not your trade, then you got to understand, okay, how do I go about doing this too?
You triggered another thought, and I actually debated leading with this as another big thing that I think a lot of early stage B2B startups get wrong. They forget, or they just don't understand, that distribution oftentimes matters more than the product.
100%.
Especially today. Like, the playbooks that were written about how to build a company, you go like look back, and they're all like, at the end of the book, it's like, oh yeah, and go put together your marketing plan. It's like, what? It's so opposite today, because there's so many companies out there. AI is making it easier. Everybody could build something. We could build a product probably here in the next 45 minutes.
Yeah.
It's super hard to get attention.
Yeah.
Because of the volume. And so, and you nailed it. A lot of these like really vision oriented, and they're super talented people. They think a good product's good enough, and they're like, that you're right, it's important, but it's to build a business, you need the other side.
You need the attention,
so we're huge believers of building distribution early. Very few founders know how to do this. I think
it's also very hard.
Oh yeah. And even if you know you need to do it, it's hard. Absolutely. It's a great point. But like, they're not willing to do it. They've convinced themselves that it's something that they'll hire someone to do later, which is funny. It's half the reason they come to us. But they're behind the eight ball. And like, there's tons of great examples. Like the big one that comes to mind to me is the founders of Atlassian, Jira. They had distribution early because they actually didn't build a software product. They had a service business. And so they knew what it was like to start to get in front of customers. A lot of founders don't have that. They just are like, oh, I see this great technology and I have this vision to do it, and they build it. And then we're like, great, and this is what happens all the time. All these startups want to go to the enterprise because VCs have convinced them that's where the money's at. And there's truth to that. What's funny is all these founders they've never met a single person in the enterprise. And it's like, hey, maybe you should have built a product for someone you might actually be able to stand in front of and have a conversation. Because then they're like, they have the thing, but they can't even get in the door. And it's like, what a shitty position to be in. So that's a big one that people get wrong. They just forget about distribution.
Yeah. There's this new trend of like, founder first story. And then I forget the name of his company. I think it's called Stan. It's like a creator economy tool.
Okay.
But the founder was like a Stanford guy, PE, and he has his own YouTube channel with like 100K plus subscribers now, where he's been documenting his journey of like, I had an idea, I quit Stanford, I did this, I raised 5 million. He brings his VC in the room and like, hey, shit on my pitch deck. And like, he's built a whole founder brand, which is, I think, also a lot of the reason why he's at 15, 20 million ARR for his creator economy tool. But then I've now started seeing a lot of founders like, here's my day trying to build a company. And there's a lot of people trying to do that. I'm not saying it doesn't work, but I'm saying being intentional with telling your story. How do you do it? How are you positioning? Because I think a lot of people see that, oh, I'm supposed to be online. And they're just trying to be online, which is a good start. Yep. But also understanding, okay, what do you want to do with that?
Yeah. It comes back to consistency and focus. And it is a great start.
Yeah.
I think about our start. When we started, even that like posting on LinkedIn, that was our version of building distribution first. We were all over the place. We're talking about everything product strategy. It's a huge surface area. Where people get stuck is they never focus.
Yeah.
And that's not only where the money's at, but that's where the traction's at, and where people want to show up and see you as you're making progress. And so, yeah, step one, like, sure, get out there, make a bunch of noise, listen for signal. But then the moment you see signal, like, make a choice. And this just comes back to ego and I think human nature. I struggled with this for a long time. You asked about entrepreneur, like, when did I want to get started? I'm a generalist. My career background, biomedical engineering, product consulting, got into sales engineering, ran a sales team, got into marketing, product marketing, got into startup studio stuff. I always had this struggle of like, my value is that I do all of this stuff pretty well, but none of it great. It makes me employable to a degree. It makes me unmarketable. And we see this with a lot of the companies that show up in the same way with their technology product. It can do everything. Great. Because it can do everything is actually why it's unmarketable. And I give a lot of credit to my co-founder because he doesn't come from tech. He came from community and content building. He came into this and was just like, I want to do something in tech. He's like, I don't care if I scrub floors. And so he was willing to get super specific. And so when we met, like those views sort of like collided. And that's how we for ourselves started to get super, super specific as we build that. Because you have to do it early on. And then from there, everything opens up. You can build tons of companies once you have an audience. It's like the solopreneur playbook that these startups should be following.
Yeah,
in a lot of
100%. part of the reasons why I started this podcast also was have good conversations and get people in the room who don't have time to grab coffee, but they have time to get on a podcast, right? And then the third thing was I want to own my distribution. Now, I don't know what that means. I don't know what I want to do with it. I don't know how long it's going to take me to get to like a reasonable size distribution. But this is my part of like, I want to own my distribution. Now, whether I launch a course tomorrow or I want to, you know, sell someone's, I don't know. But if
and
I
you don't
have
to know yet.
Yeah, exactly. But I feel like doing this audience, like doing this podcast, trying to build a small audience, it's also, what's the word I'm looking for? Like it's a journey in itself, which I think is also going to teach me a lot.
Yeah.
Hopefully I stick with it for 4, 5, 6 years and I have a decent audience. And then I really enjoy this part of it. Now, I don't have anything to sell. I don't have anything to plug, but I enjoy having the conversations. If I'm able to build an audience based off of that, maybe I can just keep doing this, have a private podcast feed and, you know, make a little bit of money. So, I mean, there's so many options.
The only problem you're going to have is picking one.
Exactly.
This is for aspiring entrepreneurs out there, this was the mistake in framing entrepreneurship that I had early. I thought it was about the idea.
Yeah.
And it's funny, I would even tell, like, at the same time, at that stage, I would tell people the idea means nothing. But truly, that's what I was holding on to from a principle standpoint. It doesn't even matter what you pick.
Yeah.
As long as you pick and stay consistent. And so for us, I know we're going to get into like more about our whole journey, but like one of the things that we bumped into really early on, we could have built 20 different things. And even as we were making progress, and this is the second mistake people make, they pick and then they realize there's money everywhere and people were throwing money at us. Do this. And it literally was different things though, X, Y, Z. Help me with a sales deck, help me with a homepage, help me with positioning, help me with my go-to-market channel, all these things. The key is saying no to that and staying dead focused. So that's when you do this, like, build distribution, you're going to have optionality, you're going to love it. The only pain would be just don't say yes to everything. It's like, 100%. Just go pick a thing and run at it.
I think we went off on a lot of tangents, which is good. But so you mentioned that what you're trying to help B2B founders do is, okay, who is it right now, right? Like you mentioned you have these 10 customers, let's position for those. Let's get you from 10 to 20, 20 to 30, right?
Yeah.
So breaking that down a little bit with companies you're working with companies that come to you, how often is this trajectory sort of modifying and iterating on their journey, right? So like I have 10 customers, you help them do the positioning and the value prop. When does that change? How does that grow and change as the company's growing? Does that make sense?
100%. It does. The earlier you are, the more it's going to change. For us, when we were getting our first 10 customers, it was, we were posting on LinkedIn, founders would raise their hands, we'd get in the room. We didn't even have a service really to sell yet. Something would resonate in what we said. We'd get in the room, they would talk about a problem, and then we would, true MVP style, say, oh yeah, we've got a service for that, and try and sell it. That's how we got our first 10 customers. And so from a positioning standpoint, from a value prop standpoint, our positioning was changing by the hour. Like literally we would have 20 calls a week with founders, especially as we were getting a lot of traction in our LinkedIn content. And my co-founder and I would take 20 calls a week, and literally daily we would check in and be like, what happened in today's calls? Anything interesting? And we would be qualitatively looking for themes.
Makes sense.
Because we already knew we didn't want to build for everything. But in the beginning, it's so painful. And this is where like the hustle truly comes in. It's painful. It's chaos. Looking back, it's like, how fun was that? Granted, when I was in it, it was like wild days of all day on the phone, then all day at night trying to build the service and the thing, and then creating content. But as soon as we had some repeatability, it was like, 3 people wanted just positioning work. Great, let's just do that. And then we went all in on that. And that just shaped what we did in our marketing with our content.
Nice.
And then, okay, great. Now we got 10 customers of the same flavor. Because that's what gets a lot of folks stuck in the beginning, is the first 10 customers are all there for 10 different reasons. And so positioning by the hour, we then went to, okay, only our positioning is going to change by the week. And it did change. At the same time, we were then building the product simultaneously.
Makes sense.
Flying the plane while building it. There then comes a time as you evolve, right? Like, so as we made it beyond, we were doing, 30, 40K a month in our service. Like it starts to harden a little bit, where it's just tuning, where we weren't doing these huge pivots. And those can and maybe will come as we add more services and go after bigger markets. Now, today, flashing forward, we do positioning with our own company maybe twice a year, where we truly reflect, did we learn anything new about our ICP? What are we going to do about pricing? Does that move us up and down market? Does it change the way we explain our value? And I think that is a cadence of twice a year for most early stage startups that are doing at least $1 million in revenue. It's usually pretty solid. We say look at it every 90 days, but it really does depend on like how much fit do you really have? The less fit, the more it's going to change. The more fit, you might not have to change it for quite a while.
Makes sense. And when you say fit, you're referring to product market fit for a company, right? Yeah. Every time this comes up, I have to ask, what's your definition of product market fit?
Yeah.
Because it's I want to say it's such a perspective term, and based on who you are and how you're doing it, so everyone has a slightly different variation to.
100%. And there's a lot of those squishy definitions out there. We actually have a model the way we think about this. We think there's a difference between problem and solution fit, which most people equate to product market fit. And we think there's this thing called go-to-market fit, going back to building distribution first. And there's really like 4 components to this. In go-to-market fit, there's 2 pieces. Can you consistently get in front of your target customers? I think it's literally the top of funnel type fit. Yeah. Going back to the example of like, I built this thing, but I can't talk to an executive. No one will meet with me. Great. You don't have
product market fit.
Well, you don't have the first part of go-to-market fit, which is really around like, can you just access the people that you're trying to access? The second layer of go-to-market fit is, can you consistently sell them? Great. You got in the room with them. It's like, oh, look at it. We got all these people. Great. Can you monetize? And so for us, our version was, could we consistently get founders in the room with us for a 20-minute chat? We solved that first. The next part of fit that we had to solve for is, can we sell consistently? That was painful. We had to build the product to do so, but it was really just building the pitch as we were building the product behind the scenes. Great. Now I have go-to-market fit. I have this model of repeatability for how I get in front of and close customers.
And also in the second part, like what you're closing on, right? In that point,
yes.
In your case, it's a particular service. In a B2B company's case, it's probably going to be a particular tech solution to whatever problem they're talking about.
But here's what's interesting. I'm actually glad you asked that, because there's a way we could have closed 5 different services. So there's a world where we would have go-to-market fit, but then when we move over to the delivery side, and this is the problem solution fit, we no longer have fit, because now we're trying to serve 5 different segments. And so we're solving 5 different problems that need 5 different services.
Yeah.
It would have blown up our business, and we knew that. And so part of that second step, yes, is one, repeatability. Most people will live in the pain of selling multiple stuff as they iterate on the product. And then once you have it, then once the product gets good, and I would say it took us, I feel so bad for our first 30 customers. We delivered a ton of value, don't get me wrong, but the service and the models were all broken, and we found all these edge use cases where it didn't work. It's taken us 2 years where the product gets good. And so now I would say we have 3 out of the 4 versions of fit. So we can get in front of them, we can close them, we are consistently delivering value. I love that. In our business model, this is separate to product market fit, but our business model is not built on retention today. We are a transactional business model. We want to get these founders in.
You're one and done right now.
One and done. Yep. We want to sharpen them up, then they got to go execute. We really don't want any part of that execution business. It's very hairy, and like there's all this variability right now.
There's more blame in it.
Yeah, and well, then there's like incentives get misaligned. Do you really want to build this? Is this the right way to build this? I think we should build for this market. Like you just run into a bunch of issues. Yeah. The last part though is truly around, can you get people to come back? Can you be sticky? And the stickiness will be different depending on what you're building and your business model. But when you have all 4 of those elements, that's our definition of product market fit. If I were to sum it up in a word, it's when you can repeatedly find, sell, deliver value, and keep people coming back on the same use case with the same product. That's fit.
I like that. I don't know where I saw some post on LinkedIn where this guy was talking about a company that has $1 million in ARR, but it was spread across like 6 different ICP types.
Okay.
And so their whole like thought in the post was, this company has product market fit, but they're not ready to scale yet because they're spread across too many ICPs. And to your point, they don't have the right service structure. They don't have the delivery structure, support structure to be able to service all 6 of them. And so when they say I need to raise to scale, they're not ready to scale yet because they have product market fit, but they may not have that go-to-market fit that you're talking about of like, how do I just double down on this one ICP? And so,
and I would even challenge, to me, it's like, do you? I would say if they truly have 5, they have 5 versions of potential fit on the problem solution side is the way I would look at that. And I would look at them very critically.
Yeah, no, 100%. And I think there's so much, and part of the reason why I wanted to dive into hey, how do you approach this for B2B SaaS companies? Because there's so many people that I think land the one customer. They're like, I have an idea. Let me go down and like build this idea. And they see a signal which sends them down this path, but it's a weak signal. And you realize 9 months in that maybe I don't.
Or it's the wrong signal. Yeah. It's like, we close. Look see the $1 million. Look, $1 million fit. $1 million fit. It's like, no, I see 200K, 150K, 150K, 150K. I don't see fit.
Yeah.
And when we reframe it that way, I mean, we scare the shit out of a lot of founders, and then they realize how hard it is. But 100%, I buy into it now.
I like that. Okay. Another thing I wanted to highlight and get your thoughts on is, for any B2B companies listening, what is the 80-20 of trying to figure this out? So I think there's one path where you work with someone like yourself, and then there's one path of like, let's say they're bootstrapping, they don't have the cash, and they just want to figure it out. What's your 80-20 on? I think you mentioned some of this stuff, but I just want to like bring it home. And how should they think about all these things that you're doing? And on one side, they reach out to you, work with them, great, they have a path forward. If they're bootstrapping, what's your recommendation on how they approach figuring out the positioning.
It's such a good question, and like any good consultant, the answer is it really depends. But I have we have an opinion that even if you haven't built anything, you should probably run a positioning exercise.
Okay.
Just as a strategic forcing function to make you really think critically about that distribution market side of who you're really building for. Is there really a problem here? Does it matter enough where people are going to spend money? Because if you don't have that, like the market viability, it doesn't even matter how good your product is. And that's the shift of, build it now, figure out how to market later. We think like, market it now. Like truly try and market it now. Yeah. It's going to be painful for us because we do get the question when people come, should I work with you now or later? Like that just comes back to prioritizing like, where are you really stuck? And every company's going to be a little different. Now, we have worked with pre-product companies. You have to realize that positioning work is all hypothesis driven.
Yeah.
And this gets us into a rabbit hole we don't necessarily have to go down. It's like, well, then how do you test positioning? And maybe we'll go there. But there's an argument to be made, do positioning first, then do product strategy. But the old school way is come up with a business strategy, how much money you want to make and what kind of business you want to build, come up with a product strategy, figure out what you want to build, and then come up with the positioning and go-to-market strategy. We think that's flawed. We would literally do it the opposite way. Actually, I take it back. We would think about the business strategy component loosely, and we would tie it to financial goals. And so when we started, we literally were like, we want $1 million a year business. It was a napkin business strategy. How we got there, we have no idea. We're just like, $1 million business, great. That helped frame all the decisions we make. And so when we were then evaluating, like, what market do we serve? What problem do we solve? We were effectively doing positioning to figure out that works. And then once we found a real market, then it was just like, what product does that market need? And could we build it? And so we did it kind of opposite. And so I don't know if I directly answered your question. Yeah. To us, the short answer is there's no bad time. And if you're thinking you might need positioning, it probably needs you need positioning help overall.
Makes sense.
Yeah.
Okay, sweet. Shifting gears a little bit to, you started the design studio, started this agency, going back to those early days, right? Like what pushed you to go from 9 to 5 to, hey, I'm going to spin up a consultancy agency, whatever.
I'm a terrible employee. And in this way, I challenge too many things. And so it's funny, even the half step before those two endeavors, I was doing product marketing at Oracle. And 160,000 employee company, billions in revenue, all this stuff. And I found myself spending all my days just arguing with VPs about actually doing stuff. And I got so frustrated by like not doing stuff. And so for me, it goes back to curiosity and like wanting to do this for a long time, but I'm just not very employable. Like there's going to be a point where I'm just going to disagree and want to do things my own way. And that sounds maybe awful, and maybe it is, but like being able to build what I want to build and help who I want to help, that is very appealing to me.
Got it.
And I'll take it a step further because an interesting conversation my co-founder and I were having, and I think if you have a co-founder, you should totally do this, is spend time thinking about your personality types. There's a bunch of tests out there. There's the one we looked at was like Enneagram tests. And there's like these numbers. We are both number 3, which means we're very achievement oriented. And it really works interdynamic wise. But I think those types of folks are always pushing for more. And that's kind of us. And so for me, it was just like, where am I going to be fulfilled in executing and building things? The answer was always eventually on my own. And it's not necessarily for the money or all those things that comes with it. That's great. It was just, I can't be fulfilled if I'm not working on interesting things and getting challenged intellectually. And what I found in a company, they maybe promise the challenging, all that, but there's a ceiling to it. 100%. And I didn't like the ceiling. I think that's silly.
Yeah. Also, at that point, you can't create your own incentive structure within a bigger company that's OKR driven, goal driven. If it's publicly listed, there's a lot of more top-down pressure to like do things a certain way, and you just gotta like, I mean, if that's the goal for the company, that's like you depending on how high or low you are in the company, you don't have a lot of say into like
100%
changing that.
And it's interesting. I think we share this. We both love the strategy side. I always have, and those are the roles that I've had in organizations. It took me a long time to realize that when you work for someone else, even if they let you own some of the strategy, you only own a part of it. Yeah. Like you can't own all that scope. And it's, and I don't want to get too political, but it comes back to the education system too, where like, oh yeah, we're going to put you in this. This is how it's structured. This is the goals. This is the work. That's not real life. And that's not entrepreneurship. 100%, like there's no rules. There's no directions. And I like that environment better and it's more realistic. I had to unlearn a lot of that. And I don't want to, down my education. I am where I am and it's great. But that's the big shift that I think a lot of people who are in a job have to understand when they move, that it's like not this financial thing, it's a mindset shift about how you're going to go about doing that and the game and the system that you're in for how you play it.
I like that. And so you decide to start this. How did you meet your co-founder? How did that happen?
Yeah, honestly, we were just on the same team. So we were at that digital product studio and we were on a side project. And this actually may be an interesting story for like how to get specific when you're small. We met when we were basically tasked with sell more strategy, sell more of the 100 services that this agency we were at could sell. And there literally were 100 services split across design, development, product strategy, all of it.
Yeah.
And
there's basically an offer for anything someone wanted.
UX audit for mobile, competitive landscape for this, design system transition, it's all of it. Yeah. And so when we were like, well, how do we sell all that? Our first idea was like, well, what if we went hyper vertical? And so me, my now co-founder, and another colleague who went on to he's now running a 60-person engineering team at Microsoft for a healthcare AI product. He's kind of a gangster from a product standpoint. But me and him, we each separately picked a small product category, market category. I had headless CMS. It was literally like random. We were like dart throwing as a joke. And what we did is I built a list of every company in the headless CMS space, an Airtable. Just put it in Airtable, started scraping some data from LinkedIn, how many employees they got, did they raise money? I went to their sites and read them. I scored it a little bit in the card. And so I had this list. I think it had 243 companies in it. And I would just cold DM it to every founder and executive I could find, just connecting and being like, hey, I'm building this report. Thought you might find it interesting. And I used it to get meetings because when you just give people something valuable, like, wait, this is me. Everyone's curious, why am I building it? What happened is I then got 35 meetings in a month with founders and executives in that space. And the first ones are brutal because I know nothing about the space. I read some blog posts, great. Yeah. I'm coming in and they
asking ChatGPT on the side.
Well, this was even at the time, I think this was like just before ChatGPT launched, so I didn't have any of this. I literally was like reading the blog post and I'm like, hey, I found these companies. And I would come in and I'd be like, hey, and the first thing they would be is like, why are you building this? And I was just honest. I was like, well, we think we can sell strategy services in the space. And so I'm really curious about the headless CMS market. And what would happen is they would then share their insights about the market with me. After I had 5 meetings, I'm like standing on the shoulders of giants. I could use their brand and name recognition to get any meeting I want in the space. And not only that, by the end of the 30 meetings, I knew a ton about the space and the inner dynamics. And so I built basically a competitive market map and where I thought things were going. And it was all hypothesis driven. Bumped into an expert panel guy. I got invited to like speak at a London event. As an expert. This was like 40 days in. I didn't know anything about headless CMS before. And so this is a pure rabbit hole, but a great example of basically I positioned for 200 people. And then the downside is I didn't have a product. So the conversations were hilarious. I'd get in the room, we'd talk about it, and they're like, great, what can you do for me? And I was like, yeah, I don't really know. And I would pitch something and we could have ran down that. That was my co-founder and I's kind of first project, was like building those lists, figuring that out. And it really got us going of like, okay, you can carve out small spaces for yourself. How can this get applied for startups? How can we apply this? And it all comes down to getting specific. And so that's kind of the initiating story. It was like a project for the company we were at, and tying it back into the organization piece. As we started, we basically built our company inside of this other company first. The company we were building it for didn't see what we saw. And so it comes back to the incentives, because we were there to stay, but our first clients were on their paper. We didn't make any money on them. And we were just like, hey, all deals are coming through our LinkedIn. We're building the service. We're building the frameworks and the thought process around this. And it just made sense to leave. But the incentives weren't there to stay,
100%.
where we could have given them this several $1 million business. And they're like, what are you going to do? We're going to work with 100 clients a year? That's exactly what we do now. We work with 150 clients a year.
Yeah. Nice. One thing I like asking everyone with a co-founder is, how did you guys figure out the working relationship? You mentioned the personality test. You mentioned you guys were on the same page there. But I want to say the statistic is that most startups fail because of co-founder conflict.
Yeah.
And so how did you guys figure out what that working relationship was like? You guys are probably friends outside of work. So what does that look like? How are business decisions or conflicts resolved? What's your...
It's such a good question. So the short answer, dumb luck. Okay. So it was nothing manufactured. Even that story about personality types, that's 2.5 years later when we're like, hey, what are we? Like, how does this work?
Are we supposed to do this?
It was always so natural. And so I truly feel like incredibly lucky. Like, the work wife type deal, I feel like I found a work wife, which is like wild. How did it happen? I don't know. We bumped into each other at a bar and like things happen.
Yeah.
The key, I would say, for folks looking for founders, and the test for that is communication styles, foundationally. And both our wives will attest. It's hilarious. We're both very aggressive. We are very candid and transparent. We love to argue. That's not for everybody.
Like healthy argument.
Well, we call it healthy. Our wives would. It was so funny when we were building the business early on, because basically our execution model, when you asked me actually before we came on the pod, hey, how do you work? The previous work was I would wake up, spend a few hours on the phone talking to my co-founder, spend a few hours in meetings with founders doing work, another 2 hours with my co-founder, spend more hours doing the work, and then more hours at night just talking to my co-founder. We would just argue about everything. Our whole thesis was the best argument wins. And this helped us change our mind. And literally it's like, change my mind. Like that was our premise about how we made decisions about the business and the frameworks we were building. Man, it's not for everyone. And my wife's, I remember I'd get off the phone and I'd be so energized, because we were like yelling at each other. Again, we never thought it was negative at all. Like if you asked him, he'd be like, oh, I've never had a negative thought. And same for me. We get off the phone, my wife's like, are you guys okay? Like, it sounded like you guys were arguing. I'm like, no, such a great session. It was just like clarity comes from us debating and arguing. And so communication styles matters. And like, it boils down to like, can you spend wild hours with that person? And so I look across the past 2 years, I mean, thousands of hours just on the phone, debating, texting. Like it has been our life for those years. And I think you would know pretty early on if that's going to work or if it's not. The second thing I'll say about co-founders is, and it comes back to incentives, so this goes for employees as well, you have to have aligned incentives. In fact, when we were making the decision to go on our own and truly spin out of this company, we talked about even the equity break and the revenue splits and all that would be. And it was really funny because technically he's a little junior than me, has never been in tech. And so he saw me and I'm like, hey, we should do this 50-50. And he was like, 50-50? He's like, you don't want more? And I was like, no. This only works if we are both all in. And so even if it's 51-49, that creates resentment in these other pieces. And so I'm like, no, it only works 50-50. And honestly, I think that lifted him up to the point where like, there's things he does in the business that I could have never done, where like you have to be equals in that. And so communication style, got to be able to spend time, and then make sure the incentives are 100% aligned, or you're looking for, I think that goes for marriage and finding spouses as well. 100%. But I do not want to give relationship advice outside of the business context, but I think they're similar.
No, I think 100% agree with that, right? And I think really understanding who you're getting into business with on a fundamental level of like, to your point, having a healthy conversation, having a healthy debate, a healthy argument, being open to like, I could be wrong. Convince me, right? Like, let's make a valid argument, right? I mean, I think when it gets to the point of like, hey, we're doing it this way because I said so, is never a valid argument. Convince me. I'm open to being convinced. I could be wrong. Maybe I don't know. Maybe my assumption is biased because of whatever my experience is. Yeah. So like, help me understand this, right? And so I think also knowing who you are as a person and not just like an idea is also really important to like getting into a co-founder relationship.
Having a co-founder also helps making not only making decisions, but preventing you from chasing stuff. So we have a decision heuristic that we loosely follow, and it comes back to the debates and the arguments, where we only go do something if it's a hell yeah for both of us. If it's not, what happens is we give the other person permission to go do it. And so the specific example that came up, we were debating, we were on LinkedIn having progress. Do we add another channel? Do we go to Twitter with content? We argued. For me, it wasn't a hell yeah. For him, it was almost a hell yeah. And so I was like, in our view, it was just try it. Don't go put a plan together, just try it. And so he runs off and tries it. Again, and it's just like forcing function to go do stuff. Came back, and it was too early. And he came back, he's like, you were right. Great. That helps, because like, we don't do anything full on until we both agree. We have this other interesting heuristic on the flip side where there's decisions that sometimes just don't matter as much, where you're like, you don't have a strong opinion. And so we call it the big baby decision making. If someone is a super, oh hell yeah, and is going to be a big baby about it and they really want to do it, we just bring it up. We're like, is this a big baby decision? Like, are you going to be the big baby and just decide this for us? And, this happened recently where we were debating whether to do a newsletter type thing. He just ran off and I didn't have an opinion. I'm like, I can go either way. Great. He's just like, no, we have to do it. And these came up mostly when we were building our model and our framework, because we had to really be aligned. And that's why we defended him so aggressively. But those two heuristics help. Hell yeah for both. If not, let him run a test, but just don't spend too much time on it. And for the decisions that don't really matter, those true two-way doors, let someone be a big baby about it and go do it, and then make a decision together later.
Makes sense. So did it work, the newsletter?
TBD. We're running it now.
Okay. Sweet. Are you using Beehive?
We're actually deciding between Beehive and the other main. What's the other main one?
ConvertKit.
Actually, no. Beehive, ConvertKit.
Substack.
Thank you. Substack.
Well, it's Kit now. It's not ConvertKit. So
noted. Well, maybe you could share some insights after the pod.
Beehive ran this whole campaign where they just targeted ConvertKit users and like VIP onboarding to Beehive, 6 months free.
Yeah.
And like it was like a whole like attack on ConvertKit. Like,
yeah,
if you don't like it, we want you here. So like, just to your point of like understanding positioning. Hey, what's your value? Beehive's been shipping really fast. Like they've been shipping a lot of features.
Can I build on that?
Yeah.
We talked about where B2B companies get stuck. It goes back to getting specific, but having an opinion. It's crazy how unwilling people are to share what they really think. And it's so funny because you see it. It's funny. Like the way it'll show up for us is like, we'll see it in the products that these startups bring us, where it's like, wow, that's like a really aggressive opinion. And we're like, hey, this is like the one that pops in my head. And actually they didn't work with us, was a direct competitor of QuickBooks. And we're like, man, this is like a QuickBooks killer type thing. And they had really aggressive opinions about what QuickBooks was doing wrong. And we're like, hey, marketing wise, you should just go say that. Go tap into the world and say, spotlight QuickBooks. They weren't willing to do it. Like, no, we don't want to poke the bear. It's like, that's great. You know what the opposite of poke the bear is? Blending in with the crowd. Like, if you're not willing to say something your competitors aren't, and we see this across the board, is they're trying to make everyone feel warm and fuzzy, and it's just too crowded to do that. You can't get away with that. And so that Beehive campaign, like, yeah, have an opinion. ConvertKit's fundamentally broken for this group. We're going to go after them. And does that come with its own struggles and limitations?
Yeah.
Sure. But it actually fosters more communication, because the people that are like, hey, I don't agree with that aggressively, well, they join the conversation, and it just gives you more distribution
100%.
and reach. And so that is the other thing too, is just have a freaking opinion. The best products do.
100%. I don't know why when you're talking about that, you know who Patrick Campbell is?
Yeah. Profitable, right?
Yeah. He had a blog. I think he was going to launch this whole, like, how he does competitive analysis. I don't think he ever launched it completely, but it was partially. Mm-hmm. But he has this thing where he talks about 4 quadrants of like, you got to put everyone in one of these 4 quadrants of like who your competitor is. Mm-hmm. And to your point, where if it's in the bottom left quadrant, you don't care about it, don't give any mind share to them.
Yeah.
If they're top left, there's someone you can start watching, being careful of what they're doing. If they're bottom right, it's, hey, these are people who I want to partner with. These are people who are serving my ICP, but they don't care enough about my ICP. So there's someone for me to like go work with, because for example, QuickBooks maybe doesn't care about like transactions or like a part of accounting, but they're someone I care about. So like, how do I leverage their big status to use users? And then top right is, I'm going to go actively try to kill these companies because they're a direct competitor. And so like, I think being really cognizant of, to your point, who they are, where they lie, infers and like aids your marketing strategy of, to your point, go actively talk about QuickBooks, have an opinion, and try to get customers, because at the core of it, if you're not trying to do everything you can to make your business successful, why are you even running the business?
Exactly.
I think like, if you're poking the bear, great. I mean, I would rather go and do that and have a strong opinion and try to build a business and make a big business. But
100%.
I think it comes down to personality type of like, what kind of founder are you? What kind of but
the other thing I'll add on the competitive piece is like, most startup competitors aren't direct competitors. The Beehive one's an interesting example. Most of the time you're competing with like apathy, and you're competing with people using a collection of tools and manual processes. And so when that happens, you really have to figure out who the enemy is. Like, and that gets really tricky. And because it's easy to follow competitors of like, oh, but we're a CRM. It's like, yeah, but you're not really competing with Salesforce. Like, and you have to be really honest about where the 100%. Market's at from an awareness standpoint. In our business specifically, we, I would say, have aggressive shots at brand marketing as a function, as an activity for early stage startups. That's one of our spiky point of views, one of many. And what it means is the companies that come to us that really want to do a bunch of brand marketing, they probably won't come to us because we tell them not to. And when they do, we just challenge them and say, oh yeah, that's not us. We don't do brand marketing. We do product marketing for early stage. But it rubs a lot of people the wrong way. But at the same time, it's what's given us the exposure to have that conversation. And the people that are bought into our idea of like fundamental product marketing on the other end love us even more for it.
Nice. So going back to sort of your journey, meet your co-founder, you sort of figure this out, go off on your own. What happens? You guys leave your design studio. Are you like hitting the ground running day one, or what does the first couple of weeks look like? Yeah,
we were hitting the ground running. I would say pretty lucky situation for how we went about things. And it was really unique because we were using LinkedIn. We always thought of our process as open source software or similar to open source software, where there wasn't like an IP thing that we had to deal with. We were like, hey, you guys can keep the model, the service, whatever. We've shared it openly with everyone. Like, no one owns that. We're just going to take our LinkedIn audience and go try and do this thing. More specifically, when we left, we were running. We were probably doing 35K a month, 40K a month, with a mix of a service and like an audit thing that was tied to the service. And then
at this point, it's just you and your co-founder.
Just me and my co-founder. Yep. And then from there, it was just literally just beating the same drum over and over and over. What's funny is, and it's ironic because our main deliverable is a homepage wireframe with copy. We didn't have a homepage when we left. Like, we were running our business purely on top of LinkedIn, but we hit the ground running. And so that first year, even when we left, I think we left in April.
This April 2023. No.
Correct. Yeah, we've really only been doing this for officially on our own about 20 months or so.
Okay.
And so when we left in that April, we almost hit $1 million by the end of the year. And then this year it just scaled up, and we've been slowly raising prices as well as the process got better. And we're on track to do about 1.5 million this year.
Nice.
Yeah.
And it's still just the two of you? Have you guys expanded? Or?
Yeah, good question. It's we have officially one contractor style employee. We pay her like a salary, but it's more of a contractor piece. And it's for the copywriting aspect of our service. Okay. And so we're building up a pool of copywriters that support our work. And so we're at this interesting point in our business where we actually are still kind of running a solopreneur style thing. And now we have different options. So we talked about this of where we go. We could, and I'll share transparently which one I think we're going to do, but we could keep doing what we're doing and keep raising prices and keep it a 3-person plus a little staff aug company and run very lean, very cash efficient, and just enjoy that. We can operationalize, hire teams to effectively deliver what we're doing, and then start turning on more marketing channels. Because again, all this revenue is just LinkedIn content. We've never run an ad ever. We go on people's podcasts, but we don't have one yet. We've never done a newsletter, although that's coming. We're not on Twitter. We're not on all these places. We're in one place. We also could add services, where you brought up Greg Eisenberg, who, like portfolio business. We get asked to do a bunch of stuff. Oh, can you help me with the sales deck? Can you help me with all these other things? we could go hire another managing partner and have like build out these service lines. That comes with operational chaos. And then the third one is, now that we have this audience and this kind of built-in connectivity to founders, there's software ideas out there that we can go run and chase. And so this is where, again, building distribution first, creating this nice business that's running. We have all these decisions that we can now make. We're really aggressive. We're not going to do all things at once. And so the next year for us is probably continuing to turn the screw, continuing to raise prices, operationalizing a bit more where we can add automations and just make the whole process more efficient. And that buys us time to go work and make bigger bets. And I don't think there'll be a venture-backed software play, at least right off the bat, but we've got ideas of how to take our frameworks and processes and apply them in ways using AI and software. But that's future states. That's where we're at now and where we might go. But yeah, 20 months in, it's been an interesting transition.
Quickly talk about, over those 20 months, you mentioned your positioning also got better and your value prop got better throughout the 20 months. How did that change, and how did your product and service change over the 20 months?
Yeah, great question. So if I had to describe our positioning in the early days, it was startup strategy.
And real quick, do you have a hard stop, or are you good to go?
I do not. I can go a little bit over.
Yeah.
The early days was like startup strategy, where we didn't have a positioning. It was like, we are smart people that could do a bunch of things. Great. That went into product strategy, still huge surface area. Pretty early on, though, we noticed that like product marketing was getting a little more steam. There were some communities that were growing, and there was like this pocket of people that like didn't have a lot of content. And there was a point, I don't even know what drove it. And it starts to tie in a little bit with Airbnb and Brian Chesky shifting over to everyone's, no one's a product manager anymore. They're now product
marketing. Yeah.
And so we're like, all right, product marketing. And so our earliest positioning, I would say, was product marketing for early stage startups.
Okay.
And then,
and your deliverable is still a homepage, or?
No. So our first engagements, actually our very first deliverable was just an audit of the homepage. We basically audit the positioning and then make recommendations of like, here's what we think's going on. We quickly threw that out. That was more just like landing page roast style stuff that we were using more for content fodder. And then we got into the service of like, no, we're going to help you with your positioning and messaging. Our first deliverable was one of our first positioning and messaging canvases. So like a strategy doc. And it was so funny because those first 20 or 30 customers, they would say, oh, I love this process. And it was really 2 workshops. I love the workshops. You guys challenged me. We got to so much clarity. I know who I'm for. I know how I'm going to talk about myself. But then they would say, but what do I do? And we're like, what? Like, what do you mean? Go build your go-to-market function. Like go, and it depends on what channel they're in, but that's the next step is like, take this positioning and messaging, deploy it in the channels where your people are at, but they're technical product-oriented folks. And we realized, shit, no one wants to buy strategy, pure strategy. And so we had to tie it to an asset. That shifted our positioning a little bit from like this murky positioning and homepage messaging, which was sort of this like thing we sort of coined instead of saying like homepage copy. We talked about it from a messaging perspective. And so our positioning went from product marketing for early stage startups to positioning and messaging for early stage startups. We got even more narrow for a time where we were saying B2B horizontal startups, because those are the ones who usually have the most positioning challenges because it can be used by all these different audiences. We then went deep for a while into horizontal PLG B2B startups, which really worked. But what we noticed is that we didn't have to do that because there really wasn't a true small knit. Like the same challenge a PLG company has is the same challenge a sales company has, just from an explanation standpoint. And to where we are today, we've sort of like, and every time we clicked it down, we sharpened our content, we sharpened our process, and we sharpened the way we sell, where everything got easier. And what's funny is you think, oh, you're going into smaller markets. Like you're not going to make more money. No, we made way more money the more specific we went, because we started to carve out that specific place where now we are basically homepage positioning and messaging for B2B startups. So we actually went back and broadened a little bit. Our sweet spot is seed Series A folks who've raised and are about to put money into their go-to-market. And if you're in that spot and you're on LinkedIn, chances are you've heard of us. And if you're working on that, like we're going to get a call. And we've kind of earned that reputation over the past 2 years. So that was kind of the progression from make a ton of noise, listen for signal, and then just keep listening for more signals and keep making choices to get small.
Nice. And how do you think about pricing? How did your pricing change throughout this whole?
Yeah, the art of pricing, because it is not a science. The beginning was basically like, we'll do it for free almost. Like we were basically doing work in public for free. We were charging $300 for the audits in the beginning. I think our first service we charged $3,000 for.
That's the workshops.
Yeah. And like in which the workshops we then turned into a productized step-by-step process. Dart throw, what do we think we could charge type thing? Like, and truly just doing it for cheap and proving it could work. And then using the credibility of, oh, it worked, and the credibility of the audience to just keep raising it. So we went from $3,000 to $4,000, $4,000 to $5,000, $5,000 to $7,500. And then we recently have taken our process up to $10,000. And I don't think we're anywhere near the ceiling. It does, when you make pricing changes, it does have implications on who you target though, because I would say the folks we no longer work with are the very early pre-seed / boot,
like the $500,000 round or lesser.
Yeah, they're just, and they still could work with us, but it's like the bootstrappers or the ones that are like, I'm trying to raise a pre-seed, I've got my own money in it. It's like, yeah, you should just follow our content and try and do it on your own. And so we have moved into, and this just comes with it getting more exposure as well, because just naturally bigger companies found us. Yeah. And so we're usually working with seed, Series A, Series B's, kind of like and it's still a spectrum in itself. And we've worked with companies all the way up to publicly traded companies, which are a hilarious example, and there's stories to share there. When we think about price, there's another woman in our space who's positioning expert, April Dunford, and she's fantastic. She's written books on it, all that good stuff. She charges $75,000 for her week-long workshop type deal. And so we sort of look at that as a loose, like, oh, okay, that's what the high end of the market looks like. I think part of our differentiated advantage is she's not totally productized. She's more bespoke to some degree.
It's like a week-long effort. And
ours is similar.
There's probably more customization on a per company. I don't know.
Yes and no. I think they're quite similar. It's just like she's willing to go shoulder to shoulder, and she's really leaning into her brand equity and reputation. We just think we can keep building that. And so if we were to keep this approach and run the April Dunford business, we'll write a book, we'll keep putting out content, and with that, we can just keep raising prices.
Nice.
And we've got some VC partnerships as well, accelerators, and they all tell us we're way underpriced, and they send us companies. We're like, in the beginning, our whole approach was reps. We wanted to be able to say that we had positioned more startups than anybody on the planet. I don't know if we're getting close to that, but it feels like it. And with that comes power, because it's like more reps means we got better, means we know what we're doing. It means our process got more valuable.
100%.
I think people see that.
Nice. And can you quickly talk about, while working with these B2B companies, what's the unlock you see happening for them before and after they work with you?
Yeah.
And because in my mind, I know it's super valuable, but if I had to ask like, hey, how is this going to help my business?
Yep.
What's the before and after?
Oh, this is such a good question. We are very aggressive of not over-promising. So the only thing we promise is confidence and clarity of the founder and a more easily understood messaging to an ICP on the homepage. And that's it.
That's your asterisk.
It's qualitative. It's very fuzzy.
100%. Yeah.
But what we see, and we think it's bullshit, we see these other agencies like, I'll get you more customers. I'll get you product market fit. I'll get you. And we're like, no, you can't promise that. There's hundreds of variables that we have no control. Right. And so we explain ourselves as like, look, right now, the way you talk about your product, it's like it's under a blanket. Our job is to remove the blanket and then give you clarity about who you're trying to show that to. And that's all we promise. And whether what's under the blanket is a crappy product, we have no control over that altogether. And if the audience you're going after thinks it's a crappy product and they don't actually have the problem you're solving, again, not on us. That's the business you decided to build. And it comes across as a little flippant to some folks, but it's the hard truth, right? And this comes back to like the value we provide is clarity and perspective to these founders to really understand what they're doing. And some folks are for that. Other folks want to buy give me the 20 leads. That's not us at all. And this gets into a bigger thing of measuring, positioning, and messaging. It's unmeasurable. The only way if you were to like scientifically try and do it, you're talking about measuring across the entire journey, cohort based from 18 to 36 months of going back to that model. Yeah. What did they see up funnel? What did they see in our offer? How did they activate? How did we actually get them to pay? Did they stick around? And like hundreds of variables through all of that. And so and we always see it. Is this the right positioning? The analogy we have is like, you're trying to find land. You're in the middle of the Pacific. Should you row west or should you row east? That's a positioning decision. You can't row for 3 days towards Japan and then be like, does this feel right? is this winning?
Yeah.
And then go 3 days towards the US and be like, I don't know.
I'm still in the same spot.
It's like, make a decision and run at it. Like there is we can't see around corners. There's no crystal ball.
I 100% agree, right? And like, I mean, we were talking about this before I press record, but I feel there's a lot of founders who try to use service agencies and consultants as cheat codes of like, hey, do the job for me, right? And like, I'm not saying that's wrong, but what I'm saying is if you don't fundamentally understand what you're building and why you're building it and how you're going to sell it, you could bring in all the consultants and maybe 1 out of 10 times it works. And like they do enough work where, you get to the next level and the next level and you raise some money and like you can throw money at the problem. But I feel like fundamentally that's not what entrepreneurship is. And like there's cheat codes, but no one's going to come do it for you.
Yeah.
And like you're saying, if it's a shitty product, that's not on you. That like you can't control the product at that point.
Consultants and agencies are perfect after you figured it out.
100%. Yeah.
Like we're on this podcast. Like you probably ran the first one and then we're like, wow, this works. I'm going to hire this studio and this editing team because they could do it 10x better than me, but I've already figured out the format. I know what questions I'm going to ask.
Yeah.
Same thing. Where people get it totally wrong, like you just said, is they come in, they're like, do my marketing. It's like, well, great. What have you done? Nothing. 0 to 1 marketing, they're now a founder, but guess what? They're not incentivized like a founder anymore. Yeah. And so they're going to charge you their fee and then the results aren't going to work because they're just not aligned. And 100%. So hire for specialists after you figure it out. That's just the only way it works.
It's fun. I had a lawyer on a couple episodes ago and I was like, hey, let's just talk through the 80-20 of what should entrepreneurs focus on and when do they really need a lawyer to come in the picture. And he's like, I've seen people spend 20 grand on company formation, which is just why? Like, it's like you're trying to avoid building the company by adding roadblock. And he's like, more often than not, all these templates you get from Sequoia or YC, they do your job. Once you have traction, you see movement, go hire a lawyer. Don't pay more than $2,500 was his recommendation. Yeah. Get your basic formation docs, IP docs done. Keep building, keep working. Yeah. Let's say you get to a couple $100K ARR. Maybe then you bring someone in to like refine everything in terms of service and privacy policy. Yeah. But like, you got to get there. You can't like spend the 20, 30
100%.
Grand. Yeah. And so to your point, you got to put in the work to figure out this stuff. And then you can like, add all these services and agents.
100%. And that was our experience. In the beginning, you're looking at the lawyer, the accountant, the salesperson, the marketer, the product person. That was us. It was just, we were just doing it. Yeah. And you chip it off and then you outsource what you can once it's working.
Nice. Wanted to quickly touch on, so you guys are heavy on LinkedIn. I think you have some 50K followers. Does your co-founder also have a decent LinkedIn following? Or is
that's the debate. He's a few thousand ahead of me. So I think he's at 60. I'm at 55 or something like that. So
hopefully the shorts we cut from this are just...
Yeah, now you're talking.
They just go viral and we'll push you over, right? But you guys double down on LinkedIn. Do you have any insights on why LinkedIn worked for you and why you're able to build a 7-figure business off of your LinkedIn? Yeah. And if you have some insights there for anyone listening.
I do, yeah. And they've changed, right? LinkedIn, with any algorithm, is a bit of a black box. When we started posting, I think our big arbitrage was visual imagery, which now you'll see it everywhere. We were one of the first folks to take a concept that we were trying to get across and make sure it was razor clear in a visual concept, so we get the benefit of stopping the scroll. Yeah. You could understand our idea in 4 seconds and then read our writing effectively. And so that was a big thing. Also, consistency. It's where everyone, it's so funny. You see all these companies, we invested in LinkedIn for 3 months, nothing happened. If you looked at I call it the Richter scale on my LinkedIn of like engagement and follows and all that, first 7 months, I'm in the void, just like everybody. It's like, this doesn't work. And it's like, oh wait, it moved. Like, and now, you look at our posts, like, and people are like, oh, you have great distribution, and sure, but that could change. And so the little tricks, if you were getting started today, consistency, know who you're speaking to, one idea per post. This is what gets a lot of people, is they have especially subject matter experts, they know so much that they're actually really poor communicators. 100%. You can't teach anything. It's like, how do you distill 15 years of experience into a LinkedIn post? It's like, you don't. You got to share one thing. And then I would also add I would call it an arbitrage to a degree, because I'm kind of going deep on, I forget his name now. He's about to release a book called like be just evil enough. And he talks about like subversive marketing tactics. And I think this sort of falls into it. In our early posts, when we started doing visuals and teaching our frameworks, we would take well-known companies and fold them into the frameworks. And we don't need anyone's permission for that. It's like, yeah, there's your logo and I know your product. I use your product. Here's what a value prop would look like for. And we use Calendly and Loom. They weren't clients, but I think we earned a little bit of pedigree and credibility of like, whoa, Calendly and the framework, Calendly, Fletch, like we get the association piece. And so long-winded way to say, be consistent, figure out a way to stop the scroll. Image does well for that. We'll see what video does. We haven't invested in a lot in that yet.
Have you seen the video tab LinkedIn has now?
I have. And we're not using it. We've got peers that are using it and they're getting a bunch of reach. Who knows if it'll turn into TikTok, YouTube Shorts. And maybe we should be doing more, and have something to say. Again, coming back to have an opinion, quality content gets distributed. So if the black box didn't send your post that you thought was great, really look at it. It's probably not that great.
Yeah.
And we look back at the 2.5 years we've been doing this, and our content sucked in the beginning, like anyone.
And if you're comfortable, we'll share a screenshot and add it right here of like your trajectory. But
beautiful.
The reason I ask is I tried writing a little bit on LinkedIn before doing the podcast. My first post got 1 million impressions.
You're kidding.
Ever. After that, I'd say average 10, 20K or whatever.
That's still great though.
But the first post I ever got it.
I've only had one post do over 1 million impressions in 2 years.
I mean, I could have capitalized on it. It was a layoff post, and then it was how I'm pivoting to product management, stuff like that. There's a couple of things I could have done to like use the momentum. Yeah. But I didn't know better. So
well, here's the thing too. It's interesting though. There's some posts that are good for engagement, and there's others that are actually good to educate the market that you're trying to sell to. Because like, I don't know the post, but based on what you shared, you would have to sell some career pivot service of sorts.
It was basically like I was at Indeed for a while, and there was a layoff, and I was like, hey, this happened. But I didn't want to make like a pity post because everyone was making pity posts. Hey, LinkedIn Network, help me. Yeah. I don't think LinkedIn's that platform anymore where like it's just career focused. It's become more of a social sales business. Yeah. And so I was like, hey, this happened and I'm just going to go figure out what I can do next. And here's what I'm trying to do. And here's some stuff I'm working on. Yep. But that was the general vibe of the post.
That framework still works though. It's like, do cool shit, write about it. Yeah. And that was you like, oh, shit happened to me, I wrote about it. Yeah. And I'm going to go do cool shit now. Yeah. Like, if that works. It goes back to the founder brand style stuff. Adam Robinson crushes on this right now with his transparency. Because people will follow that. It's interesting.
Yeah. I think the one thing I kind of get a little hesitant with on social media is I feel like a lot of people try to write as personas that they think people want to hear. Yep. To your point, right? Literally, the Anthony who I was recording with, we were talking about how he was like, just be authentic in your college applications because that's what a lot of these IVs are looking for. Don't write an essay like, oh, here's what they want. Yeah. Here's what they think because everyone's doing that. And it's
writing like The Graduate. No, be the really rough, you know, diamond in the rough version of yourself that you definitely are.
Yeah. And so I think that's where I think a lot of people try being authentic online when I know them as a person. I'm like, this is not who you are, but like they're playing that, oh, let me be authentic. And so I get it. I'm not, I don't have any opinion on it, but I just feel like sometimes people try to cater to the algorithm versus.
And it's tricky and it can be a balance. 100%. I would say, and we're not perfect, but like I would say we've done an okay job of staying consistent to our voice. But you got to listen for signal too and recognize like, oh, will this work? Like, and it comes back to examples, real stories, real progress, and things people haven't seen. Like show them, tell them something they don't know. Not, oh yeah, everyone should have a good onboarding flow. Okay, great.
Do you have any insight on the best time to post on LinkedIn?
No. Well, it's funny. It's actually really funny the timing of this because we were chatting. I'm usually posting around 8 or 9 in the morning, but honestly, get into the routine that you're used to. Because we've seen opposite things happen. It's a global community. We've had posts that we've fooled around with that we send at 8 at night that went viral, and it's like, whoa, like it really doesn't matter ultimately. That said, what'll happen when you're posting, you're going to develop a peer network. And it's almost this ladder game of peers where like you start and it's like, oh, you only have 1,000 followers. Like you kind of become like homies of like that's our small community. Like we're the 1,000 group people posting about product marketing. As you level up, you'll realize that those groups tend to like stick together of sorts. And not pods. I'm pretty anti-pods. We've never done the pod. I know people who've grown their audiences on pods. I think it's inauthentic, and I think it comes across later. You'll find people that will post around the same time, and it'll let you create a structure where, like for me, most of my posts are going off at like 8:30, 8:45 in the morning. I have a 20-minute window in there where I can respond to first comments and check out the post of other people I respect in my community and comment on their posts.
Nice. With LinkedIn, is there other channels you guys are thinking about? You mentioned the newsletter, tried Twitter. Are you just doubling down on LinkedIn, or?
We're gonna keep doing what's working. We're gonna add the newsletter, but more from a lead magnet, like just kind of structuring our funnel. It's an experiment, as we talked about. And then the one big investment we actually might make is in a podcast format.
Nice.
We didn't want to do. We wanted to make sure we had a unique like hook to it.
Yeah.
We think it's going to be our process in public. And so it's tricky because as I talk through our framework, we do a lot of our positioning work based on where people are at, and we want to get transparent on revenue numbers, what's working, what's not. And so we'll see what happens, but we'd love to bring, like basically come in, it's Anthony and I going through our process without them in the room, making some assumptions about their positioning and saying, hey, here's how I would position them. And then potentially bringing in their VP of marketing or founder in and being like, hey, how close are we? What do you think about this? And we think it could be a win-win of like, they get free consulting, people get exposure to product marketing, they get to see our process. And you kind of can follow the stories like, oh, this is how Rob and Anthony would position Copy AI, or how they position XYZ. That's a bigger bet that's on the table that we have yet to pull the trigger on, but is probably likely for 2025.
My only two thoughts on that are, I don't know if that content is timeless or not. And so some people have mentioned this where like, if you're making very topical, dated stuff, it has a window, right? Yep. And so to that point, I think that's a really good idea. Only thing I would worry about is that format, does that work 2 years? Like, does that same podcast you record still have precedence 2 years down?
Super valid.
Yeah. And so that was the only thing that came to mind when you said that.
Here's the counter advocate on it, and it requires more work. If we make positioning bets, trusting our gut, our process, and our intuition, we then get the follow-on thread of saying what happened.
Yes.
Did they do it? Did they not? Here's what happened. Here's why. And those connected dots
I like that.
Actually brings us into like more really unique ideas. Like I said, you can't measure positioning, but it's an interesting question. Can you, if you actually have the right model to do it? And that's maybe the long-term thinking about how we're thinking about what we're building.
Sweet. I do a couple of questions at the end, rapid fire. What are 3 resources you'd recommend to B2B SaaS founders listening? Books, podcasts, links, whatever.
Ooh, yeah. I need a moment to think about that. B2B SaaS, specifically for B2B SaaS founders.
Just because that's the theme. Yep. If you want to do general founders also.
So I think every B2B SaaS founder should go read Jeffrey Moore's Crossing the Chasm. I think it's an absolute must read. I think you should follow Anthony and I on LinkedIn if you're early stage doing positioning. Shameless plug, don't really care. And join the conversation. And it's not a resource, but like ask questions. Because those are, not only does it help the creators and folks like ourselves that are doing it, but people are willing to help and go do that. Resource-wise, SaaS Academy is doing some interesting stuff. We've collaborated with them a little bit. But resource-wise, you got to go do the work. And this is what's interesting. Like our version of research is just listening what other people are doing. Yeah. And so I guess the other 2 that come to mind, we're big followers of First Round, and we love their podcast of like how they unveil what companies have done from a positioning standpoint. April Dunford's wonderful as well. Again, call her a competitor of ours, but she's great. Go follow her. Those are probably the big ones that come to mind.
What's your tech stack? How do you guys run your company? And if you can talk through like just the tools you use top to down.
Yeah. It's the funny thing that pops up is Figma is our hammer to a fault. That's where we're really executing the delivery of our projects. But tech stack wise, basically LinkedIn, Figma for content creation. We use Notion a bit for content creation / like a content database. We're starting to work on a calendar a little bit. Our CRM is Airtable. We've got a couple zaps in there from a scheduling that goes into Calendly. We use Webflow for our site, and we're restoring some of this stuff and handling some of the lead capture and all that good stuff. PandaDoc for contracts.
Nice.
I I guess you can call superhuman part of it. And then a new tool we're using for LinkedIn is Condo. They're a new startup. Mitchell Tan and his team have built basically the superhuman for LinkedIn, which really niche, but
to manage DMs and stuff, or
to manage the inbox, which like most,
nice.
I guess most folks don't have that as an issue. We're fortunate that we do, or we've got like 50 people messaging us every day. And
nice.
So having a superhuman like experience there, that's about it. Pretty lean overall.
I do this bit where I'll ask you one question from a previous guest, and then I'll ask you to give me one question for whoever my next guest is.
Okay.
So your question is, what keeps you up at night?
Ooh. My first thought is, what the hell am I going to post tomorrow? I think, and that probably is the answer. We're always trying to push the boundary of like, what can we share and teach? And so that is the thing for us, is like our model, especially since we share it openly, is constantly thinking about, and maybe it's the detriment of our model, is like, what's the next innovation? And so those are the things for me. More specifically on the business side is, what does that next step of scale look like into our conversation around, do we operationalize? Do we go build software? Do we turn this purely into a lifestyle business? That's probably the big existential one.
Okay, nice. I like that.
Yep.
What's your question for whoever my next guest is?
Ooh, the question that comes to mind is similar to how you ask about like how you got into entrepreneurship, but like, what was the job you had when you knew you were gonna build your business? Like, what triggered you? And this didn't come up in my answer, but I literally, for 5 years when I was in college, I was doing construction style work, like physical labor. And that was kind of when I told myself, I was like, I'm going to work for myself at some point. I can't do this hard. It was truly hard, blue collar work. And like literally punching a pay stub of like, oh, there's my $13 an hour. That was like the moment. So did anyone have a job like that?
I like
that triggered it.
I like that. But no, I appreciate you coming on. I think this was a really jam-packed, insightful conversation. What's next for you? Where can people reach out? What do you want to plug? What can we link for you?
Yep. What's next is keep doing what's working. So LinkedIn, continuing to run our positioning process with hopefully another 150 startups this coming year, and sharing what we learned along the way. So LinkedIn's the way to find me. Shoot me a message, a DM. We reply manually to everything, and we will get to it. Just can't promise it's going to be within the hour. And again, join the conversation. Like, hop into the threads, ask questions. Like, that's where we learn when we start sharing that stuff, and be willing to change your opinion when you do so.
Nice. I like that. But thank you for coming on, and we'll link everything and give you shorts and just give you more content to post. But I appreciate your time, man.
Epic. Thanks for having me.
Thanks, man.